Hey people, I'm back. I'm going to talk a little bit today about I'm going to expand on the general deposit versus special deposit thing, which we've touched on in a previous video I did, and also covered in our generally in our Reclaiming Securities Zoom meeting back in 2020. These are recorded. I'll expand on it here now, general deposit versus special deposit, as it does relate to the great taking. It's the basis of it. How so? Remember, this is the beginning. The bankers do not hold your promises to pay in a securities account, which would make it a special deposit if they did that. Instead, they deposit them generally as a security rather than a financial asset. We'll get into that. This is the first step to the great taking. The foundation is concerns we, the people. I'm going to open with this. When you issue a mortgage, promissory note, the bank opens an account. Deposits the note generally, thereby taking title to the funds. This is important. Posts it as an asset and offsetting liability at the full value of the note to the bank, which includes the value of all future interest payments. So it's a full final payout figure at the end of the day if you paid it off. And issues a bank check to the seller in the lower face value of the note, which is the purchase price. This is an uneven exchange, thereby leaving a balance owed to the maker, which usually goes unclaimed, and that would be you, unclaimed. So what I'm going to talk about here now, as far as I know, applies to every country that's got a banking system, whether it be a central bank or banking system, financial system. So it's important that the distinguishment here is special deposit versus general deposit. Some keywords here for you to research on. Securities account, special deposit, general deposit, irregular deposit, special or specific purpose, and knowledge. Banks are going to claim stupidity, but they can't. You want to understand the meaning of those terms, and feel free to Google those terms for your enlightenment. Lots of stuff on the internet about that, various websites, law sites. I like to go to the court judgment sites because that's where the judgments are rendered, right? That's where the decisions are made. That's the best place in my mind. So I want to read something here from banks and banking and deposit types. Banks and banking, bank deposits, specific deposit, trust funds. This is from the source of this is the California Law Review, Volume 12, Number 3, March 1924. This is regarding the District Court of Appeal in America Surety Company of New York versus the Bank of Italy. So you can see internationalism here. And this is a quote from that case in respect of special or general deposit. Now hear this. It, the deposit, had no trust character since the bank had no knowledge of the special purpose. So let me explain that here. If it goes into a securities account as a financial asset, that's trust situation. So they deposit it specially, but if they deposit it generally, the trust doesn't exist. So what the court is saying here is the bank had no knowledge that this deposit was made or given for a specific or special purpose. Well, let me qualify that. When you go in a bank and you deposit your paycheck, and people deposit cash in the bank account, you write checks in that account. You pay your phone bill, your hydro bill, your car payments, your rent payments, water tax bill, whatever. So that's generally, you see, you're using those funds for general purposes, nothing specific. Unlike when you get a mortgage when you go in to purchase a home or a car, that's a specific purpose. You need to understand this. That's a specific purpose. I didn't make the deposit of this note for everything. I give it to you guys specifically for the purchase of this or the purchase of that, the alleged loan. So I'm going to demonstrate here that the banks do have knowledge of the special purpose. But you must speak up. You must speak up. They will not do it for you. They take advantage of the lack of knowledge and of people and the unwillingness of many people to acquire that knowledge. So I'm going to quote here from the Ontario, Canada Securities Transfer Act. I've also got UCC Article 8, I think it is. Yep. To back this up. So this is under Section 13 of the Securities Transfer Act, Ontario. You guys don't know what it is? Look at it. Pull it up on the internet. This is regarding a bill of exchange / promissory note. Here's what it says. Listen to the words. A bill of exchange or promissory note to which the Bills of Exchange Act Canada applies is not a security, but is a financial asset if it is held in a securities account. So your same note, one piece of paper, can be two different things. Two different things. It could be a security or it can be a financial asset. Depends how they deposit it. Securities account. This is from the same act, Securities Transfer Act. Securities account means an account to which a financial asset is or may be credited. Doesn't say security, says financial asset is or may be credited. Just remember, we're talking about your credit here. UCC Article 8-103D. A negotiable instrument governed by Article 3 is a financial asset if it is held in a securities account. Same thing, same verbiage. Pretty much word for word. UCC 8-501, securities account. Acquisition of a security entitlement from a securities intermediary, securities account. Securities account means an account to which a financial asset is or may be credited. Exact same verbiage. So you see, in both cases, it doesn't matter. And I propose it's the same for all banking systems around the world. I can't say that for certain, but I believe it is. So a promise to pay can be treated either as a financial asset or as a security, the same piece of paper, the same promise. So did you hear that? If the security in the form of a promise to pay is held in the securities account, it is a financial asset and your credit in that account. Well, I want to qualify something here. I called the Bay Street lawyer up about this. I called the Legal Society of Ontario 10 years ago or more, probably about 15. Asked about this question on this section 13 here in this securities account. And I asked him, I said, so whose credit is it in that securities account? Without hesitation, he says yours, meaning mine. It's true. So did you hear that? If the security in the form of a promise to pay is held in a securities account, it is a financial asset and your credit in that account. Whereas if they deposit it generally, which is what they do, presume abandonment, remember, or your ignorance, meaning not into a securities account, it is deemed to be a security and you are on the hook for the debt. One side you're the creditor and the other side you're the debtor. Same piece of paper, two different accounts. Same note, two different outcomes. And here's the proof that the banks do have knowledge of the special purpose. Remember I read before, the bank didn't have knowledge of a special purpose. Well, here's the proof that they do. And you just deduce this as just deductive reasoning. Got a brain, use it. Albeit they may play dumb, and they will play dumb, count on it. When you issue a note to a bank for a transaction involving the purchase of a home or of a car, let's say, examples, an alleged loan, is not the note given for a special or specific purpose, being the purchase of the home or the car. Not generally, didn't make this deposit for paying for a whole bunch of different things, which would make it a general deposit. No, it was given specifically for the purpose of the purchase of the home or specifically or especially for the purchase of the car. So they know that. You need to say it. And you can go back on this. So how can the bank claim no knowledge when clearly the note is giving for a special or specific purpose? Remember, the court said didn't have knowledge. Well, they have knowledge because the whole transaction is involving a special purpose, specifically a home or specifically a car. With that in mind, the banker should have deposited your security, the note, to be held in the securities account, which is a special deposit, so you can get your debt back, the full amount, the full amount of the security, just the final payout amount. But you need to call them out on this, that they know that the security was given for a special purpose, specifically for this. They can't say generally because it was clearly specific. There's no way they can come back and say, well, it was just a general, we didn't know it was for special purpose. Excuse me? They do. So you need to call them out on this, that they know the security is given for a special purpose. It is your credit in that account, that securities account, or should be. See, there's a fraudulent conversion taking place here, actually. We'll get into that as well. I have another one here from the Nebraska Law Review, volume 43, number 3. Banks and banking, special and general deposits. Glass versus Nebraska State Bank, Nebraska, 1963. There's all kinds of stuff on the internet. These are just a few. The court noted that a deposit is presumed general unless evidence is introduced to the contrary. And there it is, unless evidence is introduced to the contrary. So the bank's going to presume your note was given for a general purpose, or general deposit, which is BS, because it was clearly given for a specific or special purpose, being, like I said, a thing, home, car, whatever. So that is the evidence that they knew. The evidence to the contrary is they knew it was for a special purpose. It's not a general deposit by any stretch of the imagination, not even close. So there you have it. They presume general deposit, and your note is treated and marketed as a security. That be the case. But rather than as a financial asset that credits the securities account. Same piece of paper, two different outcomes. When you're the creditor, when you're the debtor. Presumptively. The evidence is the reason for which the note was given. I gave the note specifically to initiate the purchase of a specific property, a home or a car, etc. The great taking begins with the depositing of your securities, your notes generally. This is why we say, no, I did not abandon that security. Is to say, it should be on special deposit in that securities account because it was given for a special purpose. What the heck is going on here? What kind of business are you guys running? What kind of business practices is this? And last but not least, from the Bank of Canada, definition of trade in respect of securities means any sale or disposition of securities for valuable consideration. For valuable consideration. Of course, we'll say, well, the consideration was the loan. That's deemed or presumptive as well. Richard Werner, you've all sort of seen he's the author of The Prince of Vienna, #1 best-selling book in Japan, go figure, on a banking system, but there it is, #1 bestseller. And he is correct when he said, banks purchase securities. They keep that bit from us. It is a well-kept secret. Because if you knew about this secret, you wouldn't be in debt, you wouldn't be in bondage to the system, to the legal system. It would be the other way around. The corporate entities would be bowing to us. Not us bowing to them and crawling to them. Please, sir, can I have some more pudding? With this knowledge, you can get rid of all loans and mortgages. You have to get your head in the zone. There is a criminal element here. Not that we want to go down that road, but there is meat here. Theft by conversion. Converting your note, your security, your financial asset to an asset-backed bond by way of general deposit that benefits the banks, the financiers, and keeps you in debt bondage. We're not done yet. Here is 322, section 322 from the Criminal Code of Canada. Theft. 321.1. Everyone commits theft who fraudulently and without color of right takes, or fraudulently and without color of right converts to his use or the use of another person anything, whether animate or inanimate, with intent, now listen to this, with intent, this is D, to pledge it or deposit it as a security. To pledge it or deposit it as a security. And what's the outcome of that? We haven't. Where did I put that? Well, what the outcome of that is, when the bank does it on a general deposit, all of these notes become asset-backed bonds, and it benefits the banks. Why do you think those towers are so huge? It's all built on our credit. The theft, the conversion of our credit to their benefit, to their use and benefit. Yeah. So we have an entire file dedicated to this special versus general deposit that comes through information pack, and a good way to just off the cuff here, a good way to use this knowledge, especially if you're in bankruptcy, because in bankruptcy they want a list of assets, right? But nobody thinks to list the financial assets. Those are the assets they're actually looking for, not the car, not the home, not the TV, not the furniture. No. The financial assets. But nobody lists the financial assets as an asset that, well, the reason I'm going bankrupt here is because they stole my credit. Holding me in bondage, they deposit it generally instead of specially into a securities account, which would make it my credit, which would be no debt. That's why we're here in this bankruptcy venue today. Think this through. I'm not telling you what to say. But they do ask for a list of assets. And as it said right here, you saw it, you read it, and you can read it yourself. A note can be treated as a financial asset or as a security. If a financial asset goes into a securities account, it's your credit. If they treat it, and that's what they're doing, they're treating it as a security, they bundle them up and they mark them out, there's asset-backed bonds, and the banks get the benefit of that, not you, and you're all on the hook for the debt. So this knowledge, this is how you can unwind, so to say, the great taking. All that stuff talked about in the great taking, well, it begins right here. If your note was put into a securities account and the credited, you give them the check for the purchase, then the great taking wouldn't apply to you, because there wouldn't be anything out there to stick to you. There wouldn't be any of these securities floating around that the bankers, through their legal system and mechanisms and chicanery, have basically stolen it from the people. No, you're going right back to the root here. You're going right back to the root of the tree. It's like a fraud thing. It was right back to the beginning, right? And unwinds everything that happened after that. Let me be clear here. A promise to pay can be treated as either a financial asset or as a security. Same piece of paper, two different things, two different outcomes. One is you're the creditor, the other you're the debtor. The banks are playing this little game of lack of knowledge, but the point is that they cannot claim no knowledge. They can't say, they can say it, but they can't prove it. The evidence is this note was given for the specific or special purpose of the purchase of a home. There's no way it can be construed as a general deposit. That's a lie. Or purchase of a car. That's a lie. I think I've said all I came to say here today, trying to keep it shorter. And as I say, we have an entire file with our case references, stuff I've referenced here and some other stuff in that file with respect to general deposit versus special deposit. So just going to pause here for a moment. Actually, I'm going to grab my coffee. Thanks. So as per the great taking, if you read that document, hopefully you did. Either you're going to have to take control of the securities or get rid of the debt off the property. What I'm showing you here is how to get rid of the debt off the property that never should have been there in the first place. It's an unwinding thing to go back to the beginning. The only thing the bank can stand on is we didn't know it was given for a special purpose or a specific purpose. Well, but they did. Giving a note or giving $100 bill to somebody to purchase a thing is a special purpose, right? It's not for things, it's a thing, specific, special, specific. Giving you the security here specifically for the purchase of the home. It's not like a general deposit. Like I said, you'd make a general deposit, you deposit money in your bank account, day after day, whenever, and every month, and so on and so forth. And you write checks on that. You take cash out on that, and you spend it all over the place. That's general. Absolutely, it's general. Bit here, bit here, bit there, but wherever. But this is not the case in these notes, these securities, these financial assets. It was given for a specific purpose. So they can't say, you can prove that they did know it was given for a special purpose or a specific purpose because it was given because it was. It's a no-brainer. So again, the people suffer for a lack of knowledge, and I believe that's it. My notes here. Hang on, sorry. Yep, on that note, enough said. Please like, share, and subscribe to our YouTube channel here, please and thank you. And God bless you. Love you. Light of God never fails. Not possible. Keep smiling. Do a bit of your own due diligence here to confirm everything I've said in here, and then figure out a plan. And like I say, we do have a file on this on our information package. And thank you so much. And God bless. Love you. Have a miracle 2024 and onward. Till next time.